This is Rachel live from 𝐊𝐶𝐴 Studios, and you're watching The Early Trades, a show where we share with you a glimpse of the Australian share market at the open, along with the global and domestic drivers triggering market momentum. Now, Australian shares did open lower this morning, dropping 0.24%, tracking cues from a deep sell-off on Wall Street and global markets on fears that debt-ridden China's Evergrande will impact the pace of global economic growth. Now, Evergrande may not be able to fulfill its debt obligations. 8 of 11 sectors are lower over the last week along the ASX 200 index. Consumer staples is today's best performing sector so far. World stocks ended sharply lower yesterday, while safe haven assets attracted investors, with US Treasuries gaining in price, lowering down yields, and with gold rising. Shares of Evergrande, which has been struggling to raise funds to pay its lenders, took a hit of 10.2%, closing at $2 HK$2.28 yesterday. Regulators have already issued a warning that its mammoth $305 billion of liabilities could spark broader risks to China's entire financial system. On Wall Street, major indices also witnessed sharp selling, making indices close sharply lower. The Dow Jones fell 1.78%, while the S&P 500 lost 1.7%. The Nasdaq ended the session 2.19% down. The ferocious sell-off yesterday has seen a cumulative value of around $2.2 trillion being wiped off the market capitalization of world equities from a record high of $97 trillion that hit on the 6th of September. That's according to Refinitiv data. Now, top gainers of the day on the ASX during opening trades are currently Champion Iron, Corporate Travel Management, Atlas Arteria, Brambles and Ampol, whereas the bottom performing stocks so far are AMP, IGO, the Macquarie Group, Lynas Rare Earths and the Monadelphous Group. The ANZ Roy Morgan Weekly Insight about consumer sentiment edged 0.2% higher last week, taking the measure further away from the average over the past 4 weeks, although it is expected that with falling COVID case numbers in New South Wales and Victoria's plan for reopening, it may boost confidence over the coming week. Let's now take a look at prominent ASX shares during the early trade. First company on our list today is the APA Group, which owns natural gas and electricity assets. They offered to acquire AusNet Services for $9.9 billion. That translates to $2.60 per share. Initially, the company offered $2.32 per share for the acquisition. The share price of APA traded lower during opening trade at $8.66. Moving on, Australian supermarket giant Woolworths is looking to sell its Australian dollar bond with 6 and 10-year maturities. These bonds are linked to a company's sustainability program. The company will hold a meeting tomorrow with potential buyers. The share price of Woolworths traded flat during opening trade at $39.21. Atlas Arteria, developer of private toll roads, declared an unfranked dividend of 15.5 cents per share. That was in line with guidance provided in the first half of financial year. The ex-dividend date is the 24th of September. The share price of Atlas Arteria traded higher during opening trades at $6.70. Iron ore prices have tumbled below $100 per tonne for the first time in 14 months. Now it's time for a short break, but stay tuned for more news on market momentum.
Property by 𝐊𝐶𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest slowdown in the property market, tune in on 𝐊𝐶𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐊𝐶𝐴.
A very warm welcome back. This is Rachel and you're watching The Early Trades. Iron ore fell a staggering 8.8% on Monday. That's over concerns of a looming crisis on the Chinese property market. Iron ore miners such as BHP and Fortescue Metals are expected to take a hit in today's session. Moving on to the futures and commodity space, the ASX 200 index futures fell 1.3%, while the ASX 200 closed 2.1% lower on Monday, marking its steepest drop since the 26th of February this year. Yesterday, the Aussie and Kiwi dollars fell for a third consecutive session against the US dollar as concerns around China's economy weighed on risk sentiment and commodity prices. The Australian dollar took a hit of 0.44%, having touched a 3.5-week low, continuing its downward trend from its September peak. Bitcoin tumbled as much as 10% in yesterday's session as investors were trying to steer clear from risky assets. It was trading at $43,663 as at 7:35 a.m. this morning. Gold notched higher yesterday as concerns around the solvency of Chinese property group Evergrande forced investors to move to safe haven assets. However, gains were capped by strength in the US dollar ahead of the Fed's policy meeting. Spot gold rose 0.5% while US gold futures settled 0.8% higher. Looking at an uptick in gold prices, ASX-listed gold stocks such as Northern Star Resources were trading higher during early trade, while Newcrest Mining also edged higher during opening trade this morning. Meanwhile, copper prices fell sharply lower to a one-month low yesterday as looming concerns over a debt default at the Evergrande Group fueled a sell-off across financial markets, especially in materials used in construction. Benchmark copper on the London Metal Exchange fell 2% to $9,010 per tonne. Prices of the metal used widely in the construction industry earlier touched a low of 9,005 cents a tonne, the lowest since the 20th of August. Crude oil prices traded 2% lower on Monday as investors grew more risk averse. Switching to the US dollar as a safe haven asset made crude oil more expensive to hold in other currencies. Brent crude fell 1.9% to touching a session low of $73.52. US West Texas Intermediate ended 2.3% lower at $70.29 a barrel. Energy stocks such as Woodside Petroleum were trading higher during early trade, whereas Santos shares edged lower during early trade yesterday. Sorry, that was early trade for this morning. That's all for now on this early morning trades show. This is Rachel signing off, but stay tuned to 𝐊𝐿𝐴𝐼𝐻 TV as we have many more shows lined up for you for sharing live updates across the economy, markets and sectors.